we are waiting for two important macroeconomic numbers, the August CPI number and the industrial output number for the month of July. The expectation is that the August CPI number will come in at 3.42%. That at any rate was the CNBC TV18 poll. The market will of course watch out for the food inflation more closely, because that's, that was the one thing that is troubling the Reserve Bank and preventing it from loosening its stance. That is expected to come in at about 4.5, but we will have to wait and see how the vegetable inflation does. We haven't yet got the numbers, but I guess it's only a few minutes away. Let me quickly get a few words, introduce you to our guests. We are joined by Kanika Pasricha, the chief economist at Union Bank of India, Sakshi Gupta, the vice president and senior economist at HDFC Bank. Also with us in a short while will be Devang Shah, the head of fixed income at Axis AMC, and ICRA's chief economist, Aditi Nayar. Ladies and Devang, I'm just waiting for the numbers. If I don't get it, I'm going to come to you for some advance comments. But we are still waiting for it. It's not very common for the number to get delayed, but sometimes it can be just a misbehaving PIB website. Devang, is there a very strong feeling that the number will be okay? Devang, I'll come to you in just a minute. Kanika, are you getting a feeling that the inflation number is going to be lower than the market expectation of 3.45 thereabouts?
So Lata, our estimate is 3.3%.
Okay.
So our expectation is that the sequential easing in food prices, along with base effects, may lead to a slight edging lower of the headline CPI to around 3.3, 3.4%.
Okay,
that's our baseline view.
May I interrupt you? May I interrupt you? We've got the number. It's actually 3.65. So it's actually higher than what our poll said. I think the Bloomberg poll said 3.47. Our poll said 3.42. But the actual number is coming in at 3.65. So clearly food hasn't fallen as much as we thought. Yes, that is the culprit. CPI food is 5.66%. Now, our expectation was that it would come down to 4.5. So my sense is vegetable inflation is still playing a very, very tough role. Just for the moment, I'll tell you what is the headline industrial index. Growth is 4.8%, which is a little better than what we thought, but not sizably better. I think we were around 4%. The important part is that there is a clear resistance of food inflation from falling too much at 5.66. The food index is indeed down 0.4% month on month, but we still have to wait and see what caused it. My sense is it will be cereals. Okay, cereals is up 0.6% on the month, so perhaps this is just vegetables. I'll have to still wait for the full indication to come, but clearly this has not fallen as much. With 3.65 and last month's inflation of 3.6, we are running at an average of 3.6. The Reserve Bank's average for July, August, September is 4.4. So we will still undershoot that number. But for the moment, I think the market will come to terms with the fact that the inflation number is not as low as was expected. There was a very strong feeling that the 3.47 will undershoot. But it is actually overshot, and overshot how? By a good 20 basis points. So we have to take this a bit seriously. First thoughts from you, Kanika. We haven't got all the numbers yet, and I'll read them out to you. But first thoughts, do you think that this is a bit of a slightly nasty jar?
So maybe not nasty is a slightly strong word.
Okay.
But I would say, yes, it's an upward surprise, because the base effects were positive in this particular month, and it's the last month in the current cycle where we had such favorable base effects. That's one. Second, as you rightly said, it looks like that food CPI month on month, which we were at around 0.8, 0.9% sequential drop. Consensus was close to 1% sequential drop. It looks like it may be cereals, where on the ground prices were down 1.6, 1.7%. It's not reflecting yet.
Okay,
and maybe veggies as well.
I may be able to help you in that. I think the food cereals inflation, let me look at the index. The index has gone up from 191.3 to 192.4. It's gone down a bit at the index level, But year on year, the food cereal inflation is up 7.83%. 7.3%. Let me just read out all the other numbers to you. Meat and fish is up 4.3. Egg is up 7.4. Milk and milk products up 2.98. So that's almost 3%. Then fruit is down. Just where it is down 0.86, minus 0.86. Veggies is up 6.45. Vegetables is up, wait 1 minute, no. Vegetables is up 10.71. The one that is down is oils and fats. Fruit is also up at 6.45. I'm sorry, I mixed it up. Vegetables up 10.7. And pulses and pulse products are up 13.6%. So that is not looking like a very flattering number. Let me look at the month on month, and month on month cereals has fallen. Oh no, I'm sorry, my apologies. Cereals are up from 191.3 to 192.4. I think that is the big disappointment, Kanika, that cereals are up by a smidge, but they are up. And meat and fish also up a bit from meat and fish are down from 230 to 223. Then egg is also down, 194 has become 189. Milk and milk products are almost flat, 186.6. Oils and fats are also flat. Fruit is up a bit. Vegetables is down fairly substantially, about 2% down month on month from 267 to 260. And pulses are up a little bit from 213 to 214. So those are the main headings. I think it is the cereals that has had most people guessing wrongly. It has gone up from 191 to 192 month on month. And year on year, of course, it's up by 7.3%. Let me just read out some of the other numbers in terms of year on year performance. The overall number, let me just see what does the miscellaneous number tell us. Not a very good day in terms of the performance of the website. Okay, the miscellaneous index is up 3.89%. So I just want to know how core will do. Maybe core CPI is, core CPI is up 3.4. So you're not seeing a downward pressure on core either. That's the sum and substance really on inflation. Let me quickly tell you what is happening on the IIP front. The overall IIP, like I told you, was up 4.8%. Manufacturing has done well, 4.6% higher. Electricity has done very well, 7.9% higher, over and above an 8% year ago. So electricity on a very firm footing. Capital goods has picked up a goodish bit. Remember, capital goods was the low performer in the last 2-3 months because the government was not spending much. This year, this month, July, it is up 12%. So it's clearly done very well. Intermediate goods up 6.8, infra goods 12.6, consumer durables, is up 8.2. Consumer non-durables again done badly. I think there is an urban slowing, minus 4.4. That's the sum and substance of industrial output number for the month of July. The June number has been revised higher to 4.7 from earlier 4.2. I think all the numbers are with you. In inflation, I think I didn't mention fuel and light. That is up just 0.3% on the month. That's the entire numbers for y'all. Food up 5.66. So now let me have your views. Sakshi, what have you made of the entire number? Higher than you thought?
Yeah, Lata. So this number is slightly higher than what we were expecting. We were at about 3.53 for the month of August. Clearly, as you mentioned, I think the surprise is coming from cereals being higher than what we were anticipating. But I think broadly, if you look at the breakup of the numbers on the, food inflation side, sequentially, I don't see that there are too many red flags apart from, of course, cereals. So there is this sequential slowdown. Of course, there are base effects that have pulled down this number. But all in all, I think at least from the food inflation side, I don't see too many red flags. For core inflation, I think picking up to 3.4, this was again broadly in line with what we were expecting. I think that, the last month's figure that we got for July at 3.3, that perhaps was the low for core. And now you're going to start seeing core inflation perhaps move up towards 4% and then higher by the end of the year, because there are base effects that are going to start turning.
Yeah.
Right. So all in all, I think this is slightly higher, but not a particularly worrisome number at this point.
Okay. No, it's certainly not worrisome. We were, our headline has gone. Our headline was that if it was 3.4, it would be the slowest inflation in 60 months compared to 59 months, which July was. That headline is gone. Now it's not, because the inflation number is slightly higher than what it was even in July. Slightly higher, but still higher. Devang, I must get you in over here. I was hearing that one of the reasons why the bond yield fell to 6.81, it was stabilizing around 6.85, fell to 6.81 on expectations of an inflation undershoot. Now what is the sense? This is the last number the governor has, right, before he announces the policy in October, because the September inflation will come only mid-October or 12th October. So with this, are you expecting a change in stance?
So, Lata, you're right. Probably, I think markets were expecting a significantly lower number on CPI this month, and yes, it's a tad higher. But again,
we'll come back to you in just a minute. I think Devang's frame has frozen. Aditi, your thoughts? 3.65. We are still battling only 20 basis points, and 3 point something is a very good number to have. But nevertheless, what do you make of the inflation number? Are we going to be in by the year end for a significant undershoot of the Reserve Bank's full year forecast of 4.5%?
Thanks, Lata. So actually today's number is a little bit higher than what we had forecast. We were at 3.2%, so it is significantly higher than where we were. And having seen this number and seeing how now we're looking at excess rainfall in parts of the country, I don't think we're going to significantly undershoot the full year number that the MPC put out. For this quarter, there is likely to be an undershoot, and there was an undershoot on the GDP as well. So I don't think that the window has closed on a stance change in the October policy, but it's not looking like it's a very high probability of a stance change right away. And two more points from my side. On the core, I fully agree with Sakshi that we're likely to see an inching up to 4% by the end of the year. Although it may not be as fast as what we thought, because this month particularly commodity prices have been on the softer side. And now that crude has come off significantly, hopefully that will arrest the pace of core inflation moving back towards 4%. But what I'm a little more worried about now is cotton sowing is almost 9-10% lower than last year's levels. And I think that is a risk that we need to watch out for the CPI.
Yeah, I think the market will start aligning towards these fears because the inflation number has come in higher than expected. Now all the naysayers will start saying that we told you so, that inflation is not really going down so much. The late rains, it's expected to rain in October, and therefore some crops could get destroyed. Even the kharif may not be as good. All those arguments will start aligning to the higher than expected inflation. I take your point, that could happen. But Devang, you are the master of the trade in this group. The others are all economists. So you tell us, will the market now start expecting that there won't be any softening in stance in October?
Yeah. So first of all, very sorry for the infrastructure. The network is very patchy today. Yes, you are right. Probably markets were expecting a lower number on CPI, and as you rightly highlighted, I think the last few days rally was a combination of crude falling, USD rallying from 375 to probably 360, and the overall expectation that this month CPI might be lower. But our assumption is, if I still look at the entire quarter print, like even if we get a next month's print at 5%, the overall Q2 CPI expectation as against RBI's projection of 4.4 will be sub 4%. And that probably might not disappoint markets too much. Our assessment is if Fed continues, and I personally believe that Fed will do only 25 basis rate cut in the September 18 meeting. So if Fed continues with a 25 basis cut, we should not expect anything in the October monetary policy.
Okay. What would you say, Kanika, first of all, as you pointed out, inflation number is slightly higher than what you were expecting. You don't think the Reserve Bank softens at all. I just want to highlight to all of you, when the governor last spoke, I can't remember, was it CII, where, that there was a line which was, when he spoke, we didn't realize it, but when I saw the printed speech, he said, growth and inflation are in balance. That one sentence was in bold, which gave rise to an expectation that why is he putting it in bold? Until now, we still thought that we have a distance to go in terms of food disinflation. So there was a feeling in the market that perhaps he's hinting at a neutral stance. What's your expectation, Kanika?
So 3 points, Lata. First and foremost, our expectations of no stance change and no rate change in October policy. The last speech in FIBAC, if you actually note what the governor said is, yes, of course, he acknowledged downside risk to food inflation, which can't be taken away unless we have floods in September and, as you pointed out, La Nina starting October leading to unseasonal rains. So that food inflation uncertainty needs close watch, which he pointed to. But the other point that he mentioned is he's actually still feeling that growth indicators are holding up well. And that was a similar statement we got after the Q1 FY25 GDP numbers as well. So a central bank expecting growth numbers holding up well and food inflation outlook uncertain. Last but not the least, just holding him back to this whole discussion on financial stability in the August monetary policy as well. So with CD ratios consistently still showing some upward pressure, so of course gap is narrowing, things are looking better, though risks remain. And specifically, I'll just highlight to one more point, is that while Fed is expected to adopt a very gradualist 25 basis points rate cut every policy stance, and RBI-led MPC having hiked only 50% of Fed's rate hike. We just matched less than 50%. They hiked by 550, we hiked by only 250 basis points. And also with growth indicators holding up relatively better, we still have some policy space to delay change in stance and start of rate cut cycle, a shallow one, 50 basis points in our view at the current juncture. Thanks.
Okay, and if I missed it, in October you're not expecting any change in stance?
Yeah, no change in stance and rates.
Okay, let me just get a quick fire from all four of you. Aditi, October stance, rates, any expectation?
No change in rates. Small probability of a stance change. I'm not ruling it out.
Okay, not ruling it out. Fair point. Deva?
So my perspective is if Fed cuts by 50, it opens up space for 25 stance change.
Okay.
But if Fed does a 25 basis cut, there's no change.
Okay, but anyway, at the moment the CME Fed watch is almost entirely leaning 75% to a 25 basis cut only from the Fed. Sakshi?
I think, of course, no rate cut, close call on the stance change. But I think that at least in terms of their communication, the RBI will not be as hawkish as they were in the August policy.
Okay, less hawkish, but less chance, but only a minor chance of a stance change. And Kanika, you said no stance change.
No stance change, no rate change.
Okay, all right. So as you can see, two people, Sakshi and Aditi, giving a small probability of a stance change. I'm not counting Devang in that because at the moment the CME Fed watch is not indicating a 50 bips cut. So that's the word. Are any of you expecting that the Reserve Bank will lower or your inflation for the full year is undershooting the Reserve Bank's 4.5%? Kanika?
So yeah, some possibility, Lata.
Okay, of undershoot.
Of an undershoot if food prices, the weather conditions are relatively
what are you going with? 4.4? What's your current number?
So current number, we are actually at 4.5, but I would say downside risk of at least 10 to 20 basis points if all goes well on weather front.
Okay. Sakshi?
We are not looking at an undershoot compared to the RBI target.
Okay. Devang?
Our number is tracking close to 4.3.
All right. So 20 bips. Aditi?
So after today's upside surprise, I don't think we're going to look at too much of an undershoot. But in 1 month, we'll be in a much clearer position to gauge where the number will end.
Okay. Well, clearly they are going to undershoot the second quarter forecast of the Reserve Bank. I mean, 4.4 is certainly not on the cards because July, August together, the average is only 3.6. So that will have to be brought down, but we will have to see whether the full year comes down at all. Okay, now a quick word on the industrial growth number at 4.8%. I think it's pretty much close to what most of us were expecting. Wait, let me just get our poll. I think it was 4.3%. That was our expectation. It's coming at 4.8, a little better. And June has also been upped from 4.2 to 4.7. So slightly better numbers. Let me start with you, Aditi. How seriously should we take this consumer non-durables contracting month after month? Last month was also negative. This month I think is a minus 4.4. Does it worry you at all on the growth picture?
See, overall, our view on the growth picture is that even if we end up with a number, a GDP growth number close to 7%, the underlying fundamentals are extremely uneven, and that's something that the IIP tells us month after month. We all know the IIP has issues, particularly with the base, etc. But one thing that it is consistently telling us is that the disaggregated picture is very uneven, and I think that is clearly something that we do need to take away. Overall, I'm still hopeful that if we end up with a reasonable Kharif harvest, then we could end up seeing some pent-up rural demand fructifying around the festive season. So, fingers crossed that Q3 is going to look better. And our view is that there will be a back-ended pickup both on government capex as well as hopefully in demand. So, we should tend to see better growth numbers in the second half of the year.
Okay. So anyway, we are working with minus 1.5 was June and minus 4.4 is July. So those are the troubling numbers in terms of, and even actually if you take from April, May, June, July, it is minus 1.5 for the consumer non-durables. And I think I would worry a little bit about that. Kanika, growth numbers, should we worry about consumption? The other numbers look good, and I think the most important number that's bounced back is capex. That's up 12%. Overall growth, your guess?
So, Lata, frankly, we maintain our call of 7% growth number.
Okay.
While we do see consumer non-durables on a negative footing, but sequentially healing in rural demand is still underway. As Aditi also pointed out, full-blown impact likely in H2 if all goes well on the weather front. That's one. Second, in terms of drivers of growth as well, on a sectoral basis, we think the switch happens from industry last year to services this year along with agri, which grew only by 1.4% last year, 15% weight. If it's back at 4.5%, that also adds some good momentum to the growth numbers along with services, which is strong on government spending especially. Third, on the consumption front, as you rightly said, that consumption and capex growth saw some convergence in the Q1 itself, and with rural demand healing in H2, consumption growth momentum likely to see getting maintained, and a switch happens from capex to consumption being the key growth driver this year.
Okay.
So 7% we do maintain as of now.
It's not reflected in the current July number. Its capex is 12 and consumption not very good. Look, I have to give it that consumer durables is doing very well. What's your full year number, Sakshi? And does it change with the current 4.8% industrial output number for July?
No, I mean, we are at 6.8. I don't think that the IIP number changes our output for the full year. I think what I take away from this IIP number is that, in the month of July, as we had expected, that an increase in government spending is going to start pushing up growth, and you are seeing that in the capital goods and infrastructure, production numbers that we've got for July. I think that will continue to be one of the major supports for the economy going forward over the next 3 quarters.
Okay.
On consumption, yes, I mean, I think things are still very, very uneven, as Aditi pointed out. I think that the urban side is showing signs of stabilization. Of course, we have moderated from, the kind of consumption growth that we saw over the last 2 years. So things have kind of stabilized from there. But I think that there is still some strength and, on the urban side. On rural, I think that it is still very uncertain. I think that the outlook on the agriculture sector and the overall performance of the monsoon, we'll have to wait and watch for another month.
Okay. We are out of time, ladies and Devang. Aditi, just your full year number. What is your GDP number?
7%.
Okay, so we have a majority of 7% even now. Most people agreeing with the Reserve Bank's, if not 7.2, at least 7%. Let's wait and see whether in the mid-year, in the September Monetary Policy Review, the Reserve Bank moderates it at all. The economic survey stands at 6.5 to 7, which seems more realistic, but we'll wait and see. It's only the consumer number which is a little troublesome from the IIP, but as we know, these are volatile numbers. Thank you very much, Sakshi, Kanika, Aditi and Devang for joining us and helping us understand the macroeconomic numbers that have just hit us. The headline is that inflation has come in just a smidge higher than expected, so we should expect a small climb in the yields tomorrow, but of course the US PPI number will also have an impact on the numbers, on the yield. The Reserve Bank at the moment not widely expected to change its stance in October, given that the food inflation number has come slightly higher than market expectation. On that note, wrap up on this edition of the State of the Economy. Do stay tuned in. There's lots of news and views lined up for you.